going? Um, I wanted to go over two very basic chart patterns, but also make sure that people understand why these chart patterns work, because you can very easily just Google the entry and exit points and the diagrams. But the reality is that understanding what is happening in the market and what is making these chart patterns form is what is going to help you understand when to take them, why they work or not work, and what things to kind of look for. I've got an AXS chart up because there's been some really good volatility lately, and it was easy for me to find the patterns I wanted to discuss. So we're going to discuss the cup and handle, and we're going to discuss the double bottom, or are these kind of rounded structures with a very clear resistance, right? So what I'm looking at is generally the second rounded would be smaller than the first one. I'm not one of these traders that believes that everything has to be exact. I'm not going to measure out the retraction on each one. I don't really care, to be honest. It just doesn't increase the likelihood of success to me, because I'm not entering a trade based solely on that pattern. I am recognizing the pattern on the chart, and I'm recognizing the fact that other traders are going to be watching this pattern, right? My favorite trade would be to fade the breakout, because that's just a better, higher probability trade for me. But if I think it's going to be successful, I'll try the breakout. So what am I looking for? The rounded structure, the very clear resistance, right? That is hugely, hugely important. If I get these rounded bottoms without a clear resistance, then it's just a trend. You're just in an uptrend. You're seeing higher lows, higher highs. It's not something that is likely to give an impulsive move up, right? So we've got the setup. We've got an impulsive move up into resistance with volume, right? This pattern is forming because there's sell orders at resistance and there's buyers still buying, right? If you hit resistance and reject and it just comes all the way back down, that means that buyers stopped buying, or it was a scam pump, it wasn't real, whatever it may be. But when these rounded structures form, it's because buyers are failing to break through this resistance, but they're still continuing to buy, right? Once I see the break, I'm going to enter. Now, some people will say, oh, well, you wait for the retest. On something like this, that's just so impulsive, I'm going to enter on the break, right? And obviously, if you had tried to enter on this break, you would have gotten stopped. But I actually would have entered this before the break. And it's easy to say now, okay, well, there's a huge amount of volume, but you didn't have this giant volume candle. But you do have a trend of increasing volume here leading up to it. And if you look at this on a tighter time frame, right, you will see that this move up right here has increasing volume. Now, that's not a lot, but you can see this volume. If you were to take a trend, you start down here, you go up here. So leading up to the break, before the break, there's increasing volume. Okay, let's talk about the double bottom. A double bottom is an indication that there is a significant buyer or buyers that have orders in place to buy. Now, that's to the upside. Double tops would be the same to the downside, except they're sellers. So ideally, you have a support, a significant support. So when we look at something like this, mark out this level and see what it looks like on the high time frame. Because I'm seeing a double bottom there, right? And when you zoom out, you can see that this was a very, very key level. This in and of itself, if you take this wick out, is a double bottom. On the high time frame, but you can see generally that this is a key level, right? This is a support. Now, when we go back to our 30-minute chart, ideally, I want to see the second leg of the double bottom or double top break the prior. That's because that's going to run stops. And if it does that and still reverses, that's a very good sign for me. But that's not necessary, right? What are we looking for? We're looking for a resistance, just like in the cup and handle. We're looking for two bottoms, and we're looking for break of that resistance. And that's it. The reason this pattern works is because you have a set of orders that are protecting this support. And once the price breaks to the upside, all of the shorts that built up that have stops right around here, just above, because this is the obvious stop, right? If you're going to short this, you're going to short it something like this, right? You're going to say, okay, well, I'm short here. I want to go make $1 trillion, and my stop is going to be right there, right? So what I'm doing is I'm going completely opposite. I'm saying I'm going to enter here. I'm going to go this way, and I'm going to make money when you get stopped out, right? And it works for two reasons. One is you've broken through a resistance. You're now squeezing shorts out of their positions, either by liquidations or stop runs, and buyers won, basically. You've got sellers selling this level, buyers buying this level, and it doesn't matter which way it goes, right? Because we could do this any which way we want. We could have just as easily done this double top, right? You go this, you go 1, 2, and this rejects down, and your entry is breakdown of this support. It's important that you understand in both of these patterns, you have a support or resistance that is broken or that held. If you don't understand that is what's causing the pattern to form, the execution of trades, moving the market up to a level but failing to break through, is a concept that you really need to wrap your head around, because the best trades are going to occur, in my mind. If you're a swing trader and you're holding this stuff for months, that's great. There are weeks in which my average hold time for a trade is under 3 minutes. And so I really am taking advantage of other traders getting stopped out and or liquidated. These patterns provide an opportunity to enter when there's a high probability that traders on the other side are going to get wrecked. And that's all we're doing. We're looking for situations in which one side has won and it's highly likely that it continues going forward and stops out the other side. And that's it. Cup and handle, double bottom, top, you can flip them, inverse cup and shoulder, whatever. I'm not the technical guru in terms of what everything is called and what percentage of retracements have to be done. I'm looking at very clear levels of support and resistance and the patterns that build from those levels. And then I'm taking high probability trades with low risk and higher reward than the risk. Ideally 3-1, 4-1. Sometimes I'm looking at 10-1, but I'm never actually holding the bulk of the position. These guys that go for 10-1 trades and act like they're holding 100% of it, that's not realistic to me. If I get a trade that goes 1,000%, the likelihood of me having more than 10% of my initial margin in that trade when it goes to 1,000% is nil, unless it was a very, very small position to begin with, and unless it's extremely high leverage. So there's the patterns. Comment if you have any questions, if you have any patterns that you want me to cover, indicators that you want me to cover. Join the Discord. There's a premium option, but it's free to join. You can ask questions, chat, share ideas, and make sure you're just understanding why these patterns form so that you can better trade them and execute them and have confidence in your setup. All right. Don't forget, like, subscribe, check out Bing. It's the easiest way by far to trade crypto, indices, Forex, commodities. I mean, why not? Tons of benefits. They've got new user bonuses, and there's zero slippage on your stop losses and TPs. When you set that level, that's what it's going to get filled at. So highly, highly recommend it. And let me know if you have any questions.